okay. Honey, come in. I said it's okay. All right, boys. Yeah, so apologies for being a little late tonight. I had some extra little side ventures to do after work. But we're here now. Interesting day. Interesting FOMC meeting. All right, so a lot of clients asking me, and a lot of you are probably asking yourself, what the hell is going on with the US dollar? Why is it so strong? So why is it so weak after what by all reports was quite a hawkish FOMC statement? Right now, it's hawkish in one sense. It's hawkish in the sense that the door to raising rates is open. As soon as September, but most likely December, if the data continues to improve or remains as strong as it's been. All right, that's fine. Okay, now in terms of the price action following this, though, okay, the US dollar initially got stronger, okay, but then almost straight away you started to see some selling, and you can track exactly what happened here, right, in terms of looking at the bond market. Now, I think what it comes down to, and sometimes it is a little bit hard to explain why moves happen, right, but the main reason and a very large contributing factor to this is that the US dollar has been quite strong leading into this. So positionally, yeah, the US dollar is very strong. A lot of people have set themselves up for the US dollar to make new gains, and that by well could have happened if we had some direct hawkish tidbit that the market could hold on to, that you could say, well, this is what they said in the FOMC statement, right? There was nothing there that could grab the attention of the markets, and sometimes what you get is a little bit of a game, all right? And what the market was is immediately start to see the US dollar selling after that initial pop lower on the euro, say, and then it just starts to be a little bit relentless. Now, this is a little bit of a clue that the market is going higher, rightly or wrongly, at the point here, just after the release, half an hour after the release when the market's rallying, you have to appreciate that if by all accounts it should be getting stronger and it's getting weaker, that there could be more weakness to come. Yeah, and what was happening was that the bond market the yields started to fall. This is indicating that the bond traders don't expect them to raise rates anytime soon, and so in reading the responses by banks and such to what happened after the announcement, it's that they gave too many caveats in there, too many way out for the Fed to weasel out, and that they're sort of growing impatient with the Fed in a tightening cycle, which is what we're entering here in the US session. There's never been a 5-month gap. This is the first time in all the tightening cycles they've had this 5-month gap between them raising rates. Okay, so the market, the bond market's starting to tell you something here, that perhaps we're not going back to normal rates at all. And what we saw was that US 10 years started to dip, go all the way down to 1.5, and I don't want to know what they are right now. I would have to go check, but they're probably even lower. Yeah, and this is more of the bond traders who are very important in the market are growing impatient with the Fed, and coupled with the positioning of the US dollar, it was easy enough to get a sell-off, and we got that sell-off continuing into the start of the European session. Right now, does it mean it's going to last? Probably not. Right, that's not the reason you really want to start a US dollar sell-off, right? That's just because everyone's positioned long US dollar doesn't create a sustainable trend reversal. Yeah, so in terms of how far we're going to get with this euro rally, I don't think we're going to get too far. In terms of how far with the dollar Swiss is going to pull back, I don't think it's going to pull back too far. The dollar yen, I don't think it's going to pull back too much. And the Aussie dollar and the Kiwi dollar, which should be under pressure given the central banks over there are starting to rally as well. So I don't think they're going to get too much further higher. And so, I'm looking at this as an opportunity that, while the market is never wrong, right? You don't want to say, oh, the market's wrong. Just there's a reason sort of for what's happening, and you're just going to use it as an opportunity to get into some nice levels. So there is a short squeeze happening, yeah, on the Aussie, on all the pairs, um, and I think it'll last a couple of days. Yeah, and but given that the RBA is next Tuesday, I'm using any opportunity in the next 24 hours to get short on any silly move towards 76, just to be short into that RBA announcement, and or potentially get out before the announcement, but hopefully just get some selling pressure coming through. And also, I'm going to be selling the pound before the BOE as well. Okay, so the pound actually hasn't sustained this rally as much as some of the others, and so it's already started to roll over a little bit. Pound, if you get a second leg higher towards 133, I'm happy to sell into that as well. Just tactically. I mean, you have to be respecting the price action that US dollar's weak, but you don't have to believe it, and you can sort of doesn't mean you have to believe it's going to last, right? And so you can be looking for signs that it's waning, and if it does roll over and we're sitting here in a week's time and everything is at new lows, US dollars at new highs, then you can assume that what was happening today and last night was just that US dollar clean out. Okay, so you can tell. Sometimes it's good to go back and see what happens next to sort of see to confirm what was happening. If this is just a short-term thing, it's just a positional squeeze. I mean, another point to note though, of all the scenarios in trading where you have to give yourself such a big speech to get into a trade, like this is a short squeeze, we're going to sell into this because it's going back down. That's not the easiest and usually the most profitable trading up scenarios, right? It's much easier when the market's in a smooth uptrend and you're entering on dips and it's just, you're making money from that uptrend extending. This reversal doesn't make sense. It shouldn't be happening. I'm waiting for it to run out of steam and I'm gonna sell into it because I know best. That's dangerous ground, right? That's dangerous ground in terms of your psychology. Yeah. So this is if I lose money in any sort of market, it's a sort of market where I start to think, these moves are not real. So it's I mean, look, it doesn't mean that I still don't. I can't just turn my head and say, well, I think they're real. The US dollar is going to be weak now for months, so I can't change that. So I'm in this position where I'm trying to rationalize what's happening. I'm trying to look for trading opportunities, and the trading opportunities that my mind is presenting with me are the sort of ones which get me into trouble. Sort of ones where I'm looking to buy dollar yen, and I should probably be looking to sell dollar yen if I'm looking at the price action alone, right? That being said, I am long dollar yen. I am long euro yen. And I'm quite happy with the euro yen. I'm not so happy with the dollar yen. I'm long euro Swiss. Quite happy with that. That has potential if we can get a little bit of a foothold above 109. I think we can easily continue back to 110, especially if there's no hiccups in the stock market. And I'm long euro Aussie, and that's turning into a fantastic trade as there's some divergence going on between the RBA and the euro, the ECB, and that should continue up until the RBA announcement. All right, I've closed out my short Aussies, short Kiwis, luckily in profit, but I'm still on the watch out for some of those trades. The other trade we have is that buy limit on the Aussie Kiwi. Didn't get filled. It might still get filled if the RBA cuts. All right, it might still get filled if the RBA cuts. I'm happy to be filled down towards 105 in expectations that the next move will be higher over time and that it will start to, attention will turn from the RBA on Tuesday to the RBNZ. Now, if the RBA doesn't cut, we've got ourselves a new scenario. Depending on what they say after they don't cut, if they do something along the lines of don't cut and then it was a really close decision, we're looking to cut in September, then the rally that the market will do would be short-lived. It'll get you up to around about maybe 77, but it will be short-lived because the market will then turn to, well, they're gonna cut rates in September, right? So the short-term nature of that rally will be evident there. But that will be a dangerous scenario if they don't cut. An Aussie Kiwi obviously will surge higher, and you may not get filled, and it might be hard to actually get in that. But we'll talk about that if it happens next Tuesday. I suppose we should be talking about dollar yen. So all the bulls are wondering, well, have we been faked out here by the market? Is there something changed dramatically that we don't know about? Not particularly. US dollar is just weak, and it's taken the dollar yen back down to below 105. Not really because the yen's strong or there's any news out there that's contributed to that. So don't get too bearish just yet. Stocks are still also very strong. So this is more just the US dollar side of it. And you can tell it's more the US dollar side of it because, pound yen's involved, but the euro yen's not involved. Aussie yen's not involved. So it's more just a US dollar component. Yeah, and so, I mean, it's real. The market's down, but I wouldn't take it as like a technical signal that we're going lower. I'll take it more as a US dollar weakness signal. Now, that's something we shouldn't ignore, but if your view is that the BOJ tomorrow is going to be quite dovish and do some spectacular things, then I think you are well within your rights to be holding long here for either A, the US dollar strength to come back, or B, the Japanese to the Bank of Japan to surprise. There is very much a risk of the Bank of Japan disappointing. That's a huge risk actually. I'm not sure if I want to be heavy long into the dollar yen tomorrow. What I'm probably going to do is take some levels as cues. If we get back above 105, I'm probably going to buy. Yeah, and if it's a really sharp spike and it's all the way back at 105.50, I don't know. Maybe I've missed out. But even then, if it settles down, I might be buying dips. Okay. Either way, I'll have some euro yen longs and a little bit of pound dollar yen. I've just missed out on all those other entries. If it comes in and disappoints and the market falls back down to 104, I'll see what happens at 104. If we break 104, I think I have to get out of some trades and just sit to the sideline until it settles down. Yeah, I don't want to really be fighting a trend which is many months old, all the way back in started at the end of 2015. So yeah, you don't really want to fight a trend that developed. But I would be interested, obviously, down towards 100, just to see how the market goes. But there's 400 pips in between there, so no reason to get too early. Alright, so they're my current setups. Let me just bring up the professional charts for a sec. Sorry, I was a little not ready today. I also checked the room for a little bit of questions here. So if you're watching this on YouTube, come to forexsignals.com. It's a free trading room where all the live streams from some of the best streamers in the world are currently streaming their charts from. There's about 5 now, but it's definitely growing. So every few hours you should have a different streamer come on. Alright, so one of the trades we're looking at the moment as well developing is the long dollar CAD. In fact, we're going to get into that long dollar CAD right now as the stream is going. Long dollar CAD or long euro CAD, either are very good. The oil is breaking down to new lows. Let's get a little bit of euro CAD as well. A little bit less of euro CAD just because it's a bit more volatile. So oil's under pressure again, and the CAD's had its little relief rally, had its fun. Should be on its way back up now towards that 133, 135 target. Didn't get involved too early, but I was away from the computer. If I was looking at the charts when we first came in, I would have definitely gotten some of that early. But yeah, that's got a lot of potential. Stops should put below. Let's get on a proper template. Jeez, can't see this. Stops should be below 131. So it's an easy enough stop placement, maybe a little bit lower. And on the top side, we're going to be targeting that'll do. Alright. Hopefully we get a straight up green in the next 24 hours. I mean, it might be a little early in terms of the dollar sell-off not being just a 24-hour event, maybe a 48-hour event. But I'm happy enough to be long on the dollar CAD just generally, and this quite a nice level. Added to it the oil sell-off, it's makes sense. What are my targets on the short? New Zealand dollar, US. Max Brief, are you talking to me? I'm not selling Kiwi just yet. I'm selling Kiwi next week. I'm selling a little bit higher if we get a chance. I don't mind selling Kiwi. I just want to see this. I mean, it's got the potential to go another leg higher or two higher, and I just want to be short at the best level possible. And I've been killed by the Kiwi before, Aussie Kiwi in particular, but I've been killed by trying to predict when the Kiwi will go back to reacting to fundamental news. At the moment, I mean, when stocks are quite strong and it's a very easy currency to push around, it's squeezing higher. Yeah, and it's got potential to go another 100 points. It's just the way it's set up, the way it trades, the way it moves. This is a very bullish type of price action here. This can easily extend higher, but timing wise, I'm looking at towards the end of next week. All right, so August 12th is the RBNZ, so we want to get it short a little early, a couple of days earlier than that. Very, very likely they're going to cut rates. What's Crash Chef saying? Got the mess behind my... yeah, look, I'm going to organise the setup. Got the chair. I've got my old computer coming. So I've got my computer from my home base up in Queensland coming down. Should be here tomorrow or the next day. And from that, I'm going to set up a proper situation. At the moment, I've just hijacked a desk with a very old computer, streaming on two screens, and it's not the best. So look, things will be upgraded next week. Yeah, it's in terms of location and view in the background. But yeah, I mean, this place where I'm staying at the moment, it's got stuff everywhere. This is probably the cleanest area. But yeah, it'll be sorting itself out over time. Thank you for your concern, though. New chair is good. So it's the high back racing chair format. So yeah, these are you see people wearing these a lot, and I mean the reasoning is that card share is actually very comfortable to be involved in, and so it does provide you a little bit of comfort long sitting. I got one for work as well, so it's I've got that setup sorted out for a little bit. Still got to find out the proper way to mount these microphones. I don't really want to get that hardware which comes in over the top, but I might have to if. But we'll do some of that stuff tomorrow. Yeah, no, it's very good lumbar support, mate. And what else we've done? Yeah, we just got a couple of nice screens coming as well next week. So, I do have those a few of those business screens. So business monitors are ones that can go sideways, and for charting they're actually quite nice. But also, if you've got limited space on a desk, and the desk behind me is the one I'm going to be moving across to, it's got limited space, so even 4 screens will be a tight squeeze. So it is it's those sideways diagonal type. Let's see if I can. The ones which can go fully sideways. So they're a little bit more expensive, maybe $50, $60 more than the normal. Oh, that was just brilliant camera work. Yeah, so they're a little bit more expensive, but they're good for charting. Generally, it's the same time. Gold shouldn't be rallying at the same time as stocks generally, but the reason that gold is rallying is that the people are losing confidence in global central banks, and they're all printing money, and now they're losing confidence that the Fed's going to raise rates. So yeah, gold rallies in that scenario for sure. No matter what stocks doing, stocks are rallying because interest rates is 0. Companies can borrow at 1%, 1.5%. They can buy back their own stock very cheap. That's what they've been doing for the last 5 years. And the longer it looks like that lasts, the more the rally can continue. Rob Booker. Yeah, no, over time we're going to change a few things up here. This is like my temporary setup. So I can't even do much with my screen in terms of the amount of windows and things because I'm using some old tech. But my computer, which is coming, is it's got the good video cards and the good setup. So over time, give me some time, boys. We've only been doing this for a month and a half. You'll see the difference next week. In terms of what's happening tonight, I mean, you got your weekly jobless claims as always. Nothing else really hard hitting. I think the market's going to be forward looking onto this BHA. I think that the ability for the dollar yen to rally from these levels is a lot more. It's higher than if we're going in this at 106.50, right? Then the chance of disappointment's quite real. We made a lot stronger in terms of just the market reaction to take out the most stops. But at these levels, I think it's getting quite low for them to try and punch it down 100 pips before doing a sharp rally. So the downside is a little bit more limited unless they really disappoint. All right, so as long as they give something to the market, I think it's fair to see a rally coming tomorrow. And if they do a fair bit, and the market does spike lower but comes back quickly, I'm hopping in that sort of price action as well. So See a little bit of US dollar strength coming back. Obviously the crude inventories was another build. I didn't stay up for that. Yeah, so another build last night. That's where you get that sharp drop in oil. 40 is probably a natural target, yeah. Oh, we've got to go back more. $38 to 35, I suppose, is going to be the eventual target here. 38 makes sense. Alright, so that would put dollar CAD back towards 135. So that's easy enough to sort of project that sort of movement coming through onto the CAD. So I don't mind that at all. Let's have a little look at some of the data. Some of the economic reports here. Oh, that should be enough. I think that's just a statement. Just gonna double check it. Yeah, I do have to give a little bit of attention to the technicals for the tech traders out there. So we'll just have a quick brief overview from the daily point of view on the majors here. I mean, I'd use technicals for entry. I don't use it for anything else really. Not for trade idea development. I'm much more what you would call intermarket analysis, looking for correlations which are breaking down or beginning and things which have not moved yet that should be moving. And sometimes you can see pressure building in those scenarios, and when that pressure builds to a point where it breaks, then you can see those large sort of moves. Situations I really like is when the market is either really overextended one way or is range trading, and they're looking for the reason to break one way or the other, and then you get a reason. That's the sort of thing I can really get more aggressive with my entry on, and then let it run for 300 or 400 points, because it is very likely that in those scenarios, range breaks and reversals at overextended positions, you can get those 300 or 400 points quite easily. I mean, trend following as well is quite good, but you know, there's not much edge in trend following. SAS ZNX, what we've just bought is dollar CAD, mate. Buying dollar CAD with a stop below 131. And ECN DRC DP is like a aggregator of prices from different banks. Yeah. And so those aggregators like Integral, um, they give you really tight prices, right? And they do a lot of the work for you, so you don't have to go get a prime brokering account with, say, UBS or Goldman Sachs or Bank of America. You can just do all your clearing with the ECN. Um, I mean, there's a difference between ECN pricing and ECN broker. And majority of brokers are hybrid, which means that they will give you the ECN pricing, but pretty much just clear internally. Whereas if you get that straight through processing, you're going to be cleared externally. Generally, they don't clear you externally unless you're trading above one lot and have proven yourself to be a profitable trader. And in those scenarios, then they will clear you because it's just they want to make money from your volume rather than make money from your losses. All right, so that's fine. That's just part of the game. You should take it as a badge of honor if you get put onto what they call A book. Yeah, most of you would be on the B book, just the way it is. And I mean, it doesn't mean that you can't be making money, but you're just not making money into the level which is affecting their profitability. You know, it costs more money for them to check out that you're making money, or $1,000 or $2,000, than for them to actually just leave you making money and hope that you blow up. Than to put you across onto, clearing. Now, if you're cleared or not by how long it takes you to get filled. The longer it takes you to get filled, the more likely you are on the A book. Yeah, the more likely they're putting your order off. Yeah, and the amount of slippage you get lets you know as well if you're on the A book. The more slippage, especially in fast-moving markets, the more likely you're on an A book. So there's benefits to being on the B book. There's benefits to being in-house. Your trading conditions are much better against a market maker. And that's reality. So, at the end of the day, it's not going to affect you too much unless you're trading with a broker that goes insolvent because they didn't hedge. But it's not like A book makes you immune. I mean, FXCM didn't put off enough of their trades in that S&P crash, right? And they came into problems. Yeah. I mean, no, so they put off their trades, but they didn't get filled. Yeah, so you got your own execution risk as a broker, definitely. Oh, 100% DRCDV. I mean, it's not a bad thing as well. Someone's always taking the other side of your trade, right? Someone's always taking the other side of your trade. It's just the brokers taking it most of the time. So, I hate brokers anyway. I love taking money off them. I don't use much leverage if you look at the way I trade. So even back in the day when I was trading a bigger account, um, where I was doing the signal and the MAM stuff, I never really went above 10-to-1 leverage. That's just, I mean, it's just the way I trade. As my rugby coach would say to me, "You are soft as mud, mate. Get in there." And I really should be trading a much more aggressive, especially like on certain months. Like this month, I made like 2,000 pips. So if I was trading 5 lots, I'd be making more than my real job. And but what can you do? I get scared when I trade above 3 or 4 lots now. 2 lots is basically my max that I'll trade at the moment. So I know that, and I've been trading for 10 years, right? I just know that I'm not comfortable losing $5,000 in a night. I'm just not. I trade stupid when I've trade that any bigger. I traded for some people, and they were trading 60, 70 lots. Yeah, I mean, but they were madmen, so that was, yeah, I really couldn't help them because they were They were too they were too aggressive. Nick knows about that little adventure. I don't know. Probably the NDO. Nick's probably got an NDO on that. I shouldn't talk about it. I didn't lose them much money. I didn't do what they want me to do though. They wanted me to get them out of a situation. But yeah, that was real money, and that was quite large money, so it was fun. I think the biggest that the man was trading at that time, probably 5 lots, 6 lots, 7 lots maybe. Um, so in terms of trading size, make it worth your time. I wouldn't really want to trade less than 5,000. Otherwise, you're not really making enough money to justify spending your time there. I mean, look, there's something to be said about honing your craft and thing, but really, you should be trying to make, say 50 pips a day on average if you can. So, that's $50 a night. That's about a minimum you want to be making. And let's just get real for a second. Majority of you just gotta slow down the losses, not slow down the wins, right? Just not focus on not don't focus on making money. Focus on not losing money first. Yeah, let's talk about making money after that. So 10k, 10k, you're getting a little serious. 20k, that's gone from a hobby to something like a part time, serious thing. But generally, if you want to make a real go of it, you've got to end up having 50 to 100k. And that's sort of when I was trading full time in Thailand, I was trading with 50k. But back to the dollar Swiss. Interesting reversal there. So this is one of the ones that we're really interested in buying, and we're long the Euro Swiss. I think it's still eventually it's going to get caught back up here. I do want to be buying the dip, but I'll be cautious. Maybe buy towards 98. I would rather be buying dollar Swiss and selling the euro. Okay. The euro's got its own particular set of issues, whereas the dollar Swiss has got your SMB's got your back. Aussie dollars nearly broke range, nearly broke to the downside, didn't get enough momentum to, so we're smack bang, pretty evenly poised here. I favour selling rallies though, towards 76. Kiwi, I'm much more interested getting aggressive on this pair than any of the other pairs, and that would be towards 72, 71.80. I don't think we're going back above 73 before the RBNZ, and the chances of them cutting twice is very real. But this is another pair here. Okay, so the only issue about trading dollar CAD aggressively is that you got the oil issue. Oil is notoriously hard to trade, right? So while it's not directly oil, if oil does a $3 or $4 rally, if there's some news out between, I don't know, Iran and Iraq start fighting with each other or something, you see it will mess up your dollar CAD day. So whatever you're planning, you've got to be very cautious about the oil movement, and the fact it will trump most of the other movement. Euro yen as well. We're buying towards 115. So if you're not in already, maybe look to buy here. But that's neither here nor there. It still hasn't changed direction yet. So dollar yen's mucking around, right? So you're not missing out too much on the euro yen just yet. But eventually, when dollar yen starts to get a bit more substantial rally, whenever the Fed comes serious, then you've got the euro yen. There's a nice little cider. All right, RBS on the RBNZ. So these are not the first guys to come out being ultra dovish. Majority of banks now are suggesting we're going to have 2 cuts. They're suggesting 1 cut on August 11th and another cut on August 12th. It's August 11th or August 12th, depending on what part of the world you're in, right? A lot to do with how many times they cut over in Australia and in New Zealand is going to be if the CPI can get back into the target band. The Australian target band is 2-3%. So Australia's got a little bit more work to do. But they've also got a housing bubble over in New Zealand. And they've got a housing bubble here in Australia. And so what they're doing is these macro-prudential effects to try and slow down the housing bubble by limiting how much your loan to valuation you can get. So, wanting people to put up 40% of the house if it's an investment house as a deposit. And a lot of the other reports today just mostly on the FOMC. Alright, so is there any questions here tonight, boys? Yeah, it's going to be Hillary. The Democratic Convention is just like a smooth-oiled machine compared to the RNC, right? Obama's speech was brilliant, as usual. I mean, he's a very good speaker, right? But I don't know if he's definitely not well loved over there. But there's such a polarized nation at the moment. To either, I've never seen such partisanship. It's makes Australian politics look like play school. Alright, so just to recap, finally, trades that we're in are long dollar CAD. That's a new trade. Long euro CAD. That's a new trade. Continuing to hold long euro Swiss. Continuing to hold long euro Aussie into next week's RBA meeting. Continuing to hold euro yen. Continuing to hold dollar yen. Dollar yen is the most dodgy of all the trades there. And looking to buy Aussie Kiwi after an RBA cut down towards 105. You can easily buy Aussie CAD as well, but we'll look at that maybe as the market starts gearing up towards the RBA. We'll look at that trade next week. All right, guys. Have a good night. Trade safe. I'll be back tomorrow, 9 GMT.